You've probably heard that investing is one of the best ways to grow wealth, but what if you only have $100 to start? Is it even worth it? The short answer, yes. And today I'll show you exactly how to invest your first $100 step by step, even if you're a complete beginner. So, if you want to start building wealth with just a small amount, stick around until the end. You might be thinking, is $100 even enough? Absolutely. Investing isn't about how much you start with. It's about starting as early as possible and letting your money grow. Let's say you invest just $100 today and add $50 a month while earning a 10% average annual return, which is what the stock market has historically done. In 30 years, that small investment would turn into over $110,000. The key is to start small and stay consistent. So where do you put your first $100? Let's dive in. All right, so where should you invest? Here are 3 of the best beginner-friendly investment options to make your first $100 work for you. 1. ETF's the easy way to own the market. An ETF, exchange-traded fund, is like a basket of stocks that lets you invest in multiple companies at once. A great ETF to start with is VOO Vanguard S&P 500 ETF. It tracks the top 500 companies in the U.S. By investing in VOO, you own a little piece of companies like Apple, Amazon, and Google without having to pick individual stocks. With just $100, you can buy a fractional share and start your investing journey. 2. Fractional shares. Own a piece of big companies. Ever wanted to own Tesla, Amazon, or Apple but thought their stocks were too expensive? Well, now you can. With fractional shares, you can buy a piece of any stock, even if it costs thousands per share. Platforms like Robinhood, Fidelity, and M1 Finance let you buy as little as $1 worth of stock. This is a great way to invest in big companies you believe in without needing a ton of money. 3. Dividend stocks. Get paid while you wait. Dividend stocks pay you money just for holding them. How cool is that? These are companies that share their profits with investors in the form of dividends. For example, Coca-Cola KO and Johnson & Johnson J&J have paid dividends for decades. Even if you're starting with $100, dividend investing is a great way to build passive income over time. Step 1. Pick a brokerage. To start investing, you need a brokerage account. Here are some of the best options. Robinhood, user-friendly for beginners. Fidelity, great for long-term investors. M1 Finance, perfect for automated investing. Step 2. Deposit your first $100. Once your account is set up, transfer $100 into your brokerage account. It's quick and easy. Step 3. Buy your first investment. Now, decide whether you want to invest in an ETF, fractional shares, or dividend stocks and buy your first stock. Avoid these common mistakes. Don't panic sell when the market drops. Stay patient. Don't chase hype stocks. Stick to long-term investing. Don't invest money you need immediately. Stocks can go up and down. Bonus tip, keep adding more. Even if you start with just $100, adding $20 or $50 a month can make a huge difference over time. And there you have it. You don't need thousands of dollars to start investing, just $100 in a plan. Question of the day, what's the first stock or ETF you are thinking about investing in? Drop a comment below.